All right, good afternoon, traders. Today I wanted to do a spotlight on crude oil, trading October crude oil here on a 5-minute chart. I wanted to show you kind of a breakdown of why I took this trade. You see, in one of my smaller accounts, I traded one mini lot in October crude oil for $245 per contract on a mini lot, or $500 per contract on a full-size lot. So you can see here we had a 1, 2, 3 bottom pattern forming here on a 5-minute chart. There's a few things that I want to look at. So one, obviously the 1, 2, 3 pattern. You see that we're starting to base out here right around here. The cash open 8:30 a.m. Central, and the markets were making higher lows. And we also had a little bit of divergence down here on the 5-period RSI. You can see market was making lows, but you can see we are not making new lows on the RSI. We're making higher lows. So we have the divergence factor there. If we go to an hourly chart, I'm interested in seeing, are we at any significant areas of support for a long trade, of course, or significant areas of resistance if we were looking to short the market. And you can see very clearly that we have several touches right around here in this area, going all the way back to 8/14, so about a month or so. So we've bounced very sharply off of these areas here, here, here. You see we have a little bit of stickiness here, and then again where we came down and put a bottom in this morning based on the hourly chart. So we flip back to the 5-minute. We know that the market, for whatever reason, has rejected off of these lows, so that gives us an indication that the lows, at least temporarily, could be in for this intermediate time period. Notice too that we also have the shorter term moving averages starting to cycle back higher, starting to cycle back through to the upside. So that gives us an additional confirmation to go ahead and take a long trade here from around the 54.45, 54.50 level, and look for targets up here around the 54.90 to 55 even level. And that's exactly what happened in just a few short bars. Now, from a bit longer term perspective, going to the daily chart, we also have a 1, 2, 3 bottom forming. Notice that it is actually already triggered, but it triggered right into 200-day moving average. So we typically avoid those types of situations, taking a breakout or a long trade right into a moving average resistance, and the confirmation would be on a hook back up above, taking out these highs. We take out these highs, it means we're also taking out the 200-day moving average. Looking at a seasonal window to go long, I used our Smart Seasonals scanner here and scanned for shorter term trades lasting at least 2 days, but no more than 14 days. So it gives me about 2 weeks gives me about a 2-week time period to look at, and I'll only look for trades that were profitable 80% of the time and only to the long side. You can see my scan results here indicates that the next potential period is from around October 3rd to October 7th. That trade has been profitable 86% of the time over the last 7 years. Average profit's been a little over $1,100. If I'm looking for a little bit longer term, we'll find trends that last at least 10 days and no more than 45 days. Still want to look for at least 5 years of historical data, and also want to see at least 80% win rate. So if we do a scan there, you can see that the next trade window or seasonal window is around the November 14th area. And the last trade that just finished from August 19th to August 30th was about a break-even trade as crude traded sideways from the start to the end date. So we are trading in a range-bound market here in crude. We will be looking for opportunities to the long side in either crude futures or USO or another leveraged ETF. That's something to go ahead and consider adding to your radar. Please reach out if you have any questions. Good luck and good trading. We'll see you in the next update.